Hello everyone. Welcome to this month's market update and outlook, where we take a look at the key events that shaped Indian equity markets over the past month and what lies ahead. The Indian equity markets, after 5 months of consecutive decline, rebounded sharply in March 2025. The Nifty 50 representing large cap stocks, which rose by 6% on month basis. The recovery was largely driven by strong capital inflows and the strengthening of the rupee. On the investment front, foreign institutional investors turned net buyers, wherein they purchased $0.2 billion of domestic equities after being net sellers for 2 straight months. On the other hand, domestic inflows moderated to $4.3 billion during the month. Now moving to the RBI monetary policy update. In the latest policy, the monetary policy unanimously decided to reduce the repo rate by 25 basis points, that is from 6.25% to 6%, and shifted the monetary policy stance from neutral to accommodative. This implies that barring any unexpected developments, the Monetary Policy Committee is now considering either a rate cut or status quo going forward. The RBI also revised its GDP growth estimates downwards for FY26. It has reduced from 6.7% to 6.5%. On the inflation front, the outlook has improved. The RBI has now revised its estimates from 4.2% to 4% for FY26, supported by easing crude prices and likelihood of normal monsoon. Talking about market outlook, the recent announcement of large reciprocals announced by US administration could significantly impact US and global growth outlook if the tariffs stay in place. Trump's tariffs are highly focused on targeting China in the global market, while India continues to enjoy a competitive edge over other emerging markets. At present, global markets are extremely volatile, driven by deep uncertainty. Moreover, in the latest announcement, US President Trump announced that he is taking a 90-day pause on his reciprocal tariffs for all the countries except China. In his announcement, he is applying 10% baseline tariff for all the countries, but for China, it is 125% effective immediately. However, looking at the domestic scenario, stable macroeconomic conditions coupled with the RBI's liquidity measures are expected to support the economic revival for next few quarters. Earnings season will be closely tracked by the markets. Markets will remain watchful of US's trade policies and their impact on domestic growth, capital flows, and the rupee movement. That's all for this month's market update. Thank you for watching, and as always, we'll keep you updated with the latest market developments.